Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the most bullish scenario where we are looking for a series of 1-2s and then eventually a wave 3 towards the upside. As long as the market structure is holding with higher highs and higher lows, this is a scenario that we have to consider. It is similar to the price action that we had over here after the 53k low. 1-2, 1-2, a series of smaller 1-2s, and then you get your wave 3 towards the upside. Now after wave 3, we are then looking for a series of 4 and 5s to then end a bigger impulse and look for a retracement to the downside. The most bearish scenario on the 4-hour chart in this range here is an expanding leading diagonal as a wave 1, a WXY as a wave 2, and you look for continuation to the downside in a wave 3, looking for 49k to be taken. Now an expanding leading diagonal is incredibly rare. It's never preferred unless all of the other scenarios fail, but it is at least something I have to put on my chart, of course. Now if you also hit the 886 here, taken from the start to the end of your wave 1 at about 62k, it will once more significantly reduce probabilities for this particular scenario. The invalidation is taking the high at 62.7k. A better, higher probability bearish scenario would be for price to take 62.7k, but then end a structure in C or Y, and then a 3-wave WXY or ABC, and look for price to move towards the downside towards 49k. A minimum target for a C or Y would be the 0.618 on the chart at 64.6k. If we then look at the resistances to the upside, you can see we have some additional resistance here between 64.6 and 65.3k. Above that, 66.3k to 66.4k, and then we have 68.1k to 68.4k. If I show you all of the levels on my chart here, making it a bit messy, but you can see that we have a couple of dailies here as support, but to the upside we first have a daily naked point of control here, passing this, and you're going to go pretty much to 64.7k, weekly naked point of control, and 66.4k, there's a monthly naked point of control. These are definitely areas of interest to observe what price is doing there. Now on the 1-hour chart, you can see that I have a bars pattern on my chart. This is a piece of previous historic price action, but put on the current price action. And I have been talking about the range over here at 53k before in this video, but also yesterday. And the bars pattern that you see here is taken from this section on the chart. So let me zoom in, and you might actually recognize this section. So over here, we had a range. We move towards the upside, sharp move down, and then slowly grind our way towards the upside again. Now this piece of price action was taken for my bars pattern, and if I quickly turn the bars pattern off, then in a way it looks similar. Now of course price does not repeat, but it can rhyme. We have our range over here, we have our sharp move to the upside and a sharp move down, and now at the moment we are moving to the upside. We don't have a lot of information with like a grind to the upside like we had at the 53k low, but you can see that the price action is relatively similar between the two moments in time, which is at least interesting to show you guys, and it might be interesting confluence for what is to come. Now a second bars pattern on my chart would arguably be a more of a bearish bars pattern, because you want to see the low taken before then starting the grind towards the upside. This is again the same range, 53k, but now the bars pattern is bigger. This time over here, I took it from this low to this range over here. So this section on the chart is what you see in pink, and it is then put on top of the price section that we of course have over here, right? Just to compare. Now what you can see is, of course, there's quite a lot of difference. If you take a bigger bars pattern here, right, it's definitely not as nice. But what we are looking for here is a bit of a first structure to the upside, arguably what we have over here, right? A first structure up, creating eventually a double top move to the downside to take the low, and then you start to grind. That is the reason, just because we have two highs over here, that's the reason why I decided to put this bars pattern on my chart as well. Now, what does make it difficult for the bears to come down here at the moment is that in this case, you would need to count a diagonal over here, right? Just like we did at 53K, you can see the pink bars pattern is a five-wave structure, 1, 2, 3, 4, 5. But now here locally on the chart, you would need an expanding diagonal structure. So it looks a bit messy here, but what I'm looking for is then a wave 1, 2, 3, 4, and a 5-wave structure. Now this is an expanding diagonal because you can see that the channel for wave 4 is hit, and this is absolutely brilliant. Out of nowhere, in the middle of my video, we get my ad block coming in. I'm actually going to leave this in the video because it just happened. But we have a 1, 2, 3, 4, and a wave 5 here towards the upside. And the reason this is an expanding diagonal is because your wave 4 here hit the lower trend line of the channel. Now, the channel is taken from the high of 1 to the high of 3 to the low of 4. And the most common, by far most common diagonals are contracting diagonals, right? Where you have a wave 1, 2, 3, 4, 5, where wave 4 is smaller than wave 2, 3 is shorter than 1, and 5 is shorter than 3. However, in this case, wave 4 hit the lower end of the channel. That is not allowed. It is a expanding diagonal, and an expanding diagonal is again very rare, never preferred unless all of these other scenarios fail. So we can't really give it the highest probability. If we then go to the 5-minute time frame, something I generally don't really do, but I want to show you this, is we had this move towards the downside. And when you get a move like this towards the downside, you got to think, is this impulsive or corrective? If this move towards the downside is an impulsive structure, you need to be able to count this as one of these three structures. If you cannot, or with low probabilities, the probabilities are higher that this is a 3-wave structure, and therefore the probabilities are higher to take the high. So can we count an impulse down here? Impulse being a 1, 2, 3, 4, 5, no overlap allowed between a 1 and a wave 4. Now in this case, if this is an impulse, we need to count a 1, 2, 3, 4, 5, but then we have overlap. And even if we count 1, 2, 3, 4, 5, we also have overlap here, right? So that doesn't really work. And then we have a diagonal, but it's too early to call for diagonals, because if we think about diagonals, you got to preferably wait for a wave 4 to be in, 1, 2, 3, 4, and then eventually your 5. As long as your 4 is not in, it's never a higher probability diagonal. Usually other scenarios have higher probabilities. So in that case, we would need a wave 1, 2, 3, 4, 5. And we're only working on a wave 2. So not great probabilities. And then you have a double 1, 2. In a double 1, 2, you then have a finished wave 1. Finished wave 2, and you need a 1, 2, and this needs to be another 1. Now you can see that this second wave 1 is very big compared to your first wave 1, which does lower the probabilities, because a second wave 1 is, in Elliott wave terminology, a lower degree wave 1, and preferably it is similar in size or actually a little bit shorter compared to your first wave 1, but you can clearly see it is a much bigger move down. So this lowers the probabilities that this structure to the downside is an impulsive structure, and at the moment increases the probabilities that this structure to the downside is a corrective structure, which in turn would increase the probabilities to sooner or later still look for that high to be taken. If we then zoom out and look at the CVD divergences, then we still have this bigger bullish CVD divergence that hasn't yet played out, because for that to happen, we need to take the high at 62.7K. All of the local bullish CVD divergences here have played out. Higher low in price, low CVD took out the high. Played out. Same here, higher low on price, lower low CVD took out the high, played out as well. And now here we need to wait for a new range to form. If you have the CVD chart open, then you can see that at the moment there's not much information. You just have a couple of candles This is a bug, probably AGGR is updating stuff in the background or whatnot, but they're working on it. This can take a little while, but just so you know, it is absolutely normal. It can happen sometimes, but at the moment, the CVD chart, AGGR, is not working. If you then look at the news, then we had some news yesterday. Today, nothing on the agenda really, but on Friday at 4 p.m., we do have some high impact news here, so make sure you trade safe around that hour. It might increase the volatility. So if you then look at the probabilities of the different scenarios, then on the 4-hour time frame, the probabilities remain higher to still take 63k at some point first, at least, compared to taking 49k first. And on the 5-minute time frame here, at the moment, the probabilities are higher. You have a 3-wave corrective structure down instead of an impulsive move down, which in turn does increase the probabilities to sooner or later still look for that high to be taken. Now, if price takes 63k, we'll take it from there, right? Depending on the structure that you then get, if price takes out the high and moves to the upside, we can continue looking for higher time frame, either more bullish, impulsive structures to the upside, or bearish scenarios where we look for a big amount of resistance and price to move back towards the downside. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.